One of the biggest mistakes that new bookkeepers make is accepting every single client that comes their way. Hey everyone, Nick Lornquist here, and in today's video, I want to talk about what your ideal client should look like, especially if you're a beginner bookkeeper or just trying to start doing bookkeeping to build your own business. But this can also apply for if you are already experienced, but you're trying to scale. What type of clients should you be trying to target? So in this video, I'm going to go over a few different factors that come into play when you're trying to identify your ideal client and then trying to target specific clients. So we're going to talk about who your ideal clients are, who to avoid early on, and then I'm going to give you some real examples of what types of small business owners to go after using my experience and my client base. So let's get right into it. And the first thing that you need to worry about when you're trying to target small business clients, again, small to mid-sized clients, is what type of accounting method are they on? And there's two main types. There's cash basis versus accrual basis. And you're going to want to target businesses on the cash basis of accounting. Now, that doesn't mean that you need to target businesses that are only accepting cash and not credit cards or something like that. It's basically two types of accounting that you could do your bookkeeping by, and then also the type of accounting that you report on your tax returns as a small business owner. So what's the difference? On a high level, cash basis accounting is pretty simple and easy to understand. It's recording transactions when there's actual cash moving in a transaction. For example, you would record sales or revenue from a customer if they handed you cash or a check or through some sort of payment processor. So when that money hits the business bank account, you record it as sales when it's actually paid. And the same sort of thing goes with expenses. You would record an expense when you actually pay the money and when the money comes out of your bank account. So that's pretty much what most small businesses are on. Now, accrual basis is a little bit more complex. You're basically recording the sales or the revenue when the services have been rendered, not necessarily when you got paid. And then the same thing with expenses. You would record the expense when you actually incurred that expense, not necessarily when you cut a check to the vendor. So that's really the main difference. As I said, most small businesses that you're going to be targeting are going to be on cash basis anyway, so it kind of works out. But what types of businesses use accrual accounting? These are going to be mainly much larger organizations and probably corporations. Think about the big players like Amazon or Target, for example. Those are publicly traded corporations and they are on the accrual basis of accounting, just because it's a much more accurate way to get a sense of your financial performance, but it comes with a lot more accounting complexities, which as a bookkeeper is going to be out of your scope. So that is definitely number one, and you might get calls from people on accrual basis. And I just recently did last week. It was a C corporation that was formed in Delaware, and during my interview with them, I pretty much cut the call short by basically saying, sorry, I only work with small businesses on the cash basis of accounting. And then I referred to him to a small CPA firm that could definitely help him. So that is definitely the first thing that you should be asking when a potential lead gives you a call is what type of accounting method do they use? Now, next, you're going to want to identify a specific niche. And when I say niche, it can be very broad as small businesses that are service-based industries, all the way down to an actual industry type like a plumbing and HVAC company. So for me, I don't really niche down to a very, very specific type of business, but you are going to want to target service-based businesses. So this is pretty straightforward. These are businesses that are not retail stores. They are not basically maintaining an inventory. These are going to be businesses that provide some sort of service to a client or customer, and that's how they make their revenue. And then they obviously have their direct costs and their selling and general administrative expenses that really any business have. So some examples that you're going to want to try to target when I say service-based businesses, think of anyone in the trades or construction. Okay, so electricians, plumbers, HVAC, general contractors, roofing contractors. Those are probably one of my favorites because those are good examples of service-based businesses, and the workflow is kind of consistent between any of those industries. So I really like that, and I have multiple clients in the trades, and I am always happy to take on a small business client within the trades. So another service-based type business that I really like is anyone in the professional services type field. And again, that can include many, many different types of actual businesses, but on a high level, think consultants, coaches, or solo professionals. All right, they're using some sort of specialized skill to provide a service. That's how they get their revenue. And then they're going to go ahead and have their selling expenses, marketing expenses, any sort of payroll, all that stuff that comes along with running a business. So trades, professional services, and lastly, I personally really like e-commerce businesses, specifically Amazon stores. So one of my first clients was an Amazon store, and it's just a really good small business to target. Now, they do technically have some inventory requirements that they need to report from a tax perspective, but most clients that I've gotten are all on cash basis, and you really just need access to whatever third-party software they're using, whether it's Shopify or Amazon Seller Central, and then you can really just break out the bookkeeping transactions based off the information from those portals. And then after that, it's really just a matter of identifying their direct costs, like their cost of goods sold that they're buying. And then it's really just basic advertising costs, professional service expenses, other general and administrative expenses. And they are, in my opinion, a very good business to go after, especially if you're just starting out, because really, at the end of the day, like I said, they might have some inventory reporting requirements, but if they do report inventory on their tax returns and they want that reflected in QuickBooks Online, then you're really just making an annual adjustment to just move some money from cost of goods sold expense into an inventory asset on the balance sheet. And you can coordinate with the tax preparer on that. But in my experience, a lot of the business owners don't even really care about getting that information into QuickBooks Online. They really just want to have their profit and loss ready to hand over to their CPA, which they will go ahead and take care of the rest. So those are some examples of service-based businesses. And then with the exception of Amazon stores, they're not really a service-based business, but that's an example from my client base that I really like, that I think anyone starting out could probably target as well. Now that I covered basically some examples of the types of businesses to target, I do have a couple examples of businesses not to target. I already covered one. Those are businesses that are on the accrual basis of accounting. Again, they're probably really big, really complex. There's probably much more in-depth inventory tracking and a lot that comes along with that. You're just going to want to steer clear of that. There's other basically businesses that I probably avoid, and those really are like actual brick and mortar, like retail stores that might have chains and multiple locations, because again, those are probably just going to be too big to handle. They're probably going to want to have a little bit more data put into QuickBooks than just kind of your basic money in, money out type transactions. I would avoid any inventory heavy businesses. So these are businesses that really want to track their inventory, and maybe they even want to track it in QuickBooks Online and they want your help doing it. Again, if you have experience in that and it's no problem, by all means, definitely go after businesses that want to actively manage their inventory. I've just never had to do it, and even though I know how to, I just kind of don't want to, because it would just be a lot more time and effort, and it's just kind of out of my scope. And then lastly, certain organizations that I would steer clear from if you're starting out are certain complex businesses like law firms or real estate investors. Those are just two high-level examples. I have clients in each of those, and I really like doing the books for them, but there's additional reconciliations. You kind of have to have some industry specific knowledge in order to like truly understand how to navigate those additional reconciliations, those additional statements that you kind of need to get, and what information to pull. So I would say for starting out, those two might not be your best bet. So again, you're just going to kind of have to ask some questions, but I would say super high level, really big organizations, accrual basis accounting, and then anything that has like really industry specific compliance and bookkeeping requirements, such as the couple examples that I mentioned, I would probably not target those when you're first starting out. And then now that you basically kind of have an idea of type of accounting and the type of niche that you want to target, again, it's got to fall into a service-based business. And I would say that that would definitely be ideal for starting out. Or if you want to scale and get more clients, then definitely try to target service-based businesses. But how can you determine the size and whether or not this might be a good fit for you? I would say try to stick with solopreneurs, like maybe yourself. So there's only one business owner. Maybe they are also the only employee. Or if they're a solo business owner, I would say like 1 to 10 employees or subcontractors generally might indicate that, okay, this might be a good small business where there's clearly a need for them to outsource their bookkeeping, but they're not too big where they're going to be super complex for you. So you obviously want to make sure that they're small enough to stay simple, but they're big enough where there's actually a need for them to outsource their bookkeeping. Because obviously if they're solopreneurs and they're too small, then they're probably just going to be better off doing their bookkeeping themselves. And I would also say targeting businesses that have been in business 5 years or less are pretty ideal, because think about it. They are going to start, year 1 and year 2 by just kind of getting their groove going, building their businesses. And then really after that, things are going to kind of start to take off, and it's going to be a little bit too much for them to handle all by themselves. That's really when they start delegating, and they're going to be delegating the bookkeeping, and that's where you come in. And another thing that I would consider is consider your past experiences. Meaning if you have experience working in a specific industry that kind of falls into this ideal client that I'm trying to lay out for you, then that might be a good opportunity for you to double down and target those specific type of businesses. So basically, if you have experience working within a electrician company, you were an office manager for an electric contracting company, so you kind of already have a feel for how that business runs, well then you might want to try to specifically target those types of businesses. And that is definitely another thing to consider. But if you're just starting out and you really don't have any past experience in a specific type of niche, then again, you don't need to really get that specific. But obviously, if you do and it fits well with you, then you might be better off trying to target those types of businesses first. So with that, I hope that paints a clear picture of the types of clients that you should target if you're starting out and if you're trying to scale. These are going to be businesses that you can easily take on more and more and more of these types of clients. So I want you to position yourself very well early on, not get trapped by any additional tasks or scope of work that you weren't really prepared for. This just kind of makes everything a lot clearer for you and basically will allow you to get good experience with multiple types of niches. Then you can figure out which one works best for you. Overall, your first client does not need to be impressive, but they need to be manageable. So if you found this video helpful at all, or if there's a specific type of business or niche that you're considering, put it in the comments and follow for more tips on how to grow your bookkeeping business, and let's unlock your potential.